Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 18th of May. All right, most of the news, as you'd expect, is around the US debt ceiling, okay, whether that's going to be raised or not, and also the regional bank issue. Now, both of these situations, I've been saying it all week, it's a storm in a teacup, right? The news services really sort of push the fear factor. Once again, it looks like they may come to a deal. I still think they'll roll off. Like, it's no big deal if they can't pay everyone, right? It's happened before. I've seen it, and nothing happened. We all got super hyped, and then there was nothing in the end. The regional bank crisis, well, they're saying it's sort of over. Some of these banks rallied 10%. You know, they're still down a considerable amount, but the whole focus and the pressure from these events will sort of come into play and then fade, then come into play and fade. So don't think it's over yet. But we are seeing across the board a bit of a reprieve on a number of instruments, and the dollar continues to rally. Now, let's just have a look at what where the focus is today, right? And you got to factor in amongst everything else, we've got this, this silent or quiet, slow-moving news story, which is the US debt ceiling and also the regional bank crisis. But we have got some data coming out that can impact various things. What we're looking for is major data today is the AUD Employment numbers. Okay, very robust, very important for the central bank. The ECB President Lagarde is speaking. You got some house prices there out of Canada, and then you come down, you got the sort of weekly jobless numbers and some Philly Fed numbers here out of the US as well. Okay, so they're the key aspects. Existing home sales, keep an eye on those as well. But what we're looking for is something to get our teeth into, and we don't really necessarily have that just at the moment, right? So dollar index heading up, euro heads lower. The numbers out of Europe are still continually coming in weak. It's like the sleeping giant euro at the moment. And this is where I sort of focused on yesterday. Gold, right? It got beat up, right? I mean, I know it's rallied a long way, but if this whole crisis was something real, that'd be up here somewhere, not down around 1980. Okay, a little bit of a stop loss run there in oil. You're seeing the Dow Jones Mini come back, as is the S&P. They're back in the ranges. Tesla was up as well, so the Nasdaq's gone up a bit, and well, cryptos are just sort of hanging in there at the moment. So, and just on the currencies, right? Focus on the ones that are working together, right? Sterling, Aussie, Kiwi, all pretty much sort of behaving along the same sort of route. And you might be thinking, well, the dollar index is up. How come Sterling, Aussie, and Kiwi rallied? Well, we know euro is 58% of the basket. So if euro goes down, the dollar index goes up. But the dollar, okay, rallied against the yen, the Swiss. I mean, it's pretty static against the dollar CAD. You got sort of various things pulling dollar CAD from one end to the other. It's found a bit of a home there at 134.52. So, okay, so what do we do with that? Well, we've got Aussie data, and we sort of got a bit of an idea of what's going on here. But really, this whole geopolitical issue, which is the US trying to sort of work out their debt situation, okay, it's just an unfortunate event that we can't sidestep, and you have to factor that in. Now, guys at the banks, just understand this. They'll be looking at this situation, and they would have seen it 100 times. Well, not the actual debt issue, but the markets will go quiet, right? And they actually enjoy the quiet time. Like, retail traders in general are sitting there going, oh, I've got to make money today. I've got to make money. It's like, for the bankers, it's completely opposite. They see the markets when they go into a situation where the news is dominating like it is. It's like, oh, this is great. We can actually sit back and relax, probably for a week, okay, or 2 weeks, right? This thing doesn't come up till the 1st of June. It won't probably be done until then, if at all then. May even be 2 weeks afterwards. So this is a relaxing time for most traders at the banks. So before you get yourself all in a tiz and think, oh, I've got to make money today, I've got to make money, just calm down, right? The opportunities will come when they come, right? And this is the problem for most traders. They don't have the discipline, patience, or control to wait for the opportunities, right? There are technical buildups. Obviously, you see a red here on the Bitcoin and a lot of the cryptos. Yeah, well, I'm not really trading those at the moment. The equity markets, I'll be just keeping an eye on the US equity futures. They're down at the moment. Is that working across the currencies? No, it's not. Okay, commodities, what's happening there? Well, they're having a little bit of a reprieve, but They have been getting hammered. The commodities, I think, is where there's some cash to be made, and keep an eye on that. And of course, start to look around the markets. Oil, for example, could be well worth a look. And if you're looking for other things to trade, I'd start to sort of branch out your interest, okay, and knowledge, and start to look at some of the other instruments. And if I'm just coming down here, like the US dollar relative strength, and have a look what's performing extremely well and what's not. Okay, it's a good way to work out where there are pressure points. Like the rand, right? It's what is it, up 5.37% for the month. Now that's a lot more than any other instrument here against the dollar. Check it out. Work out where the what's going on, and you might find there's some diamonds in the rough here when you start looking across the board, working out what's performing better or worse against the dollar. Okay, it's something to do, especially to keep you busy whilst the markets are just sort of maneuvering around this sort of various news events. All right, nothing more we can do. We're going to wait for the opportunities. As I said, the key events for today, keep an eye on the Aussie employment numbers. And we need significant variance there to really get something going, because it's a little bit up and down. So don't get yourself all caught up on that. If anything, look across the Aussie and the Aussie crosses. You might find something there that is a lot more tangible than just Aussie against the US dollar. All right, guys, that's it from me. Have a good one. All the best. Cheerio.